Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we are going to look at the indicator named as Rank Correlation Index, which is shortened as RCI. We will see how this indicator works, what are the ways which we can use this indicator to figure out the opportunities in the market. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. There is the Euro USD chart with the each candle period defined at hourly. Let me add this indicator simply by doing a quick search. If you type in RCI, here it comes, Rank Correlation Index. The index is a bounded indicator. Its values can vary from -100 to +100. It is simply a percentage term. It is normalized for getting us the idea of the trend and the strength of the trend. We see that this indicator compares the existing value, the closing value, or whichever is your applied price to the certain value a predefined period back. So using those two comparisons, we get to know how the price has changed and how it is correlated to the prior price. So we get to know if the momentum is bullish or if the momentum is bearish using this rank correlation index. It is in percentage terms, so we get to see how much the value is higher in comparison to what it was a certain period back. In this case, 14 is the calculation period. So we are seeing this correlation with the existing value, and as you can see here for the current hourly candle, the RCI stands at 12, which means it is slightly but not strongly above this prior value. If we look at the current time and if we go back 14 hours in today's trading session, you will notice that the value is certainly higher but not so much. So we are looking at this output, which is slightly higher. So we get to know if the price move is substantial or if it is just a shallow move. Even if there has been wide fluctuation, we have to consider these in comparison to the prior price, and even if there was this sharp move, now that the value has recovered and it is not really far off from the value 14 hours back, we are having this RCI, which is just slightly higher. Now, if we were to look at the comparison when the RCI was below zero at minus 93.4, here, if we were to compare these values with the prior value, you would have seen that there was a substantial difference in these two values in a negative manner. The closing value was much lower than the prior value, so we had these RCI, which was trading closer to its lower bound limit of minus 100. So we have this indicator which is going to give us a good idea of how things are unfolding and how strong the current move is. And since there is a bounded indicator, when it inches close to the 100, it will remain around that upper bound value. Even if the trend gets stronger and stronger, the value is not really going to overshoot. So you are in a position to compare these output values, and if you see that the trend is remaining in the same territory above 90 or above these values which are substantially higher, you simply have to consider the implication that the trend is quite strong and it is continuing in the same direction. So if the trend remains strong, the values will continue to rise, and as a result of that, you will have these indicator at the or the levels close to the upper bound of this indicator. But as things stabilize, you will see that even if the price doesn't really decline much in comparison to what it was earlier, we will see the change of course for the output value, and it will give you the indication that the trend is changing. There is this change in the momentum, and it is the time to go for the profit booking or to look for the opportunities in these changing scenarios. And the trend might be changing, so you will get these inference from the change in the output value of the RCI, and you will be able to gauge the changing sentiments and change your trading position accordingly. You can utilize this indicator to look for this kind of changes after there has been substantial move in the existing trend. So whenever the trend change is going to take place, it will be picked up by this indicator in a quite fast manner. It is a indicator which is quite responsive to the price fluctuations. So you will be in a position to determine that the trend has changed and it is the time to go for changes and change the tactics, change the position. If you were long earlier, maybe not only it's time to book the profit, but maybe it's time to initiate new short sale trades as well. So you can use this indicator in this fashion, in this manner, to go for the changing market dynamics and try to exploit these changing dynamics for your benefit. The level of zero is considered as the decisive marker, but what happens is when the underlying instrument is not really going anywhere, in that kind of scenario, you will see frequent changes in the trend if you were to simply rely on these zero as a critical marker. If you consider the output above zero as bullish, and if it is going to cross over to negative territory and the output of the RCI is going to drop below the zero, then you can go for the initiation of the short sale trade. But I think better it will be for us to wait and go for the confirmation when the output of the RCI drops closer to 100, and when the next move happens and again it retests that low level, I think that is the time to go for the initiation of the short sale trade, because when the trend is not strong, we will have multiple moves which are going to remain in a narrow range. So in those kind of circumstances, from time to time, the value will be crossing over from one territory to another, from bullish to bearish and from bearish to bullish. So we will have to consider these continuous fluctuations and plan our trades accordingly. So as a result of that, we have to go for these kind of filtering mechanisms, and only when there is substantial move and the output of the RCI is confirming it on multiple occasions in the same direction, we can then go for the initiation of the trade in the expectation of the continuation of the newly established trend. So that is the benefit of using the RCI. So you will have to carry out these kind of observations and see how you can utilize these indicator in a best possible manner. You will have to go back in time, see how the RCI responded to the price fluctuations earlier, how responsive it is to the fast, to the swift changes when there is a data release or some big event. You will see that the price of the underlying instrument is going to be quite volatile. It is going to jump shift gear quite fast. So we will have to see how RCI responds to those kind of circumstances, and then only we will be in a better position to judge its advantages as well as its disadvantages, because this is not a foolproof indicator. No indicator is foolproof, so sometimes it is going to misfire, and it is better for us to know the limitations of the indicator we are working with, and then we can try to filter out some of the trades, and we will be in a better position to go for the trades which we feel are likely to be profitable or higher probability of making profitable trades. Now let us see what we can do in terms of its customization. We are going to consider these editing options provided on the platform. The input can be varied. We can go for different types of applied prices, close price, open price, high price. All these prices are there depending on what kind of price you use for the input mechanism. You will see the changes in the output of the indicator. So we will have to try out these different combinations. Candle period can also be varied. If you increase this calculation period higher, you will see that the output is going to become a lot more smoother. You will see this change, and there is a lot more smoothing as we increase this calculation period. The single candles volatility is not going to cause much of an impact on these output of the RCI, but if we lower the calculation period, then less amount of data, price data will be used for the calculation of these indicators. So accordingly, it will become much more responsive, much more volatile at the same time. So you will have to try to balance this trade-off and see what kind of combination is going to serve your purpose in a best possible manner. Output, you can go for different kinds of color combinations. If you are happy with the existing color, you don't really have to carry out any changes. But if you feel like that you want two different colors to represent the trend up and trend down, you can do that as well. And even you can vary the styling combination level. Maybe you can think about adding 0 as one level, which will make it easier for you to see these changes. But as I said, in the event of the underlying instrument remaining sideways, we will see continuous fluctuation from one territory to another. So it is not really that easy for us to gauge the trend change simply from these crossover from one territory to another. So we always need to be careful about this. Advanced editing option, we calculate on new candle only, highlight the time period zone. We can go for this, and your calculation period will be highlighted. The calculation can be customized further with the instrument being used from the chart. You can do the same thing for the candle period. You can use it from the chart, or you can even specify it to be considered independently of these charts candle period. So for example here, now the calculation of the RCI will be as per each candle being of 15 minutes rather than the charts candle period, which is hourly. So the output of the indicator is going to be quite different to what we were seeing when the candle period was simply used from the chart. So all these options are going to cast much of an impact on the output of these indicators. So you will have to see what kind of combination is going to work for you, and accordingly you can go for the customization, further customization of these indicator. Now I am going to revert back to use from the chart. Side can be asked and bid. So slight difference will be there, but more or less the direction is not going to be much different. It is going to be the same. Show indicator on all the periods. So if you want this indicator to be available whenever you change the charts candle periods, you have to opt in for this. Else you can specify which particular candle period you want this indicator to be available on. So only on those candle period this indicator will be available. So So that's how these system works. That's all from my side for today's session. If you have any query or any idea to share, do write to me in the feedback and I will be more than happy to take the discussion forward. Next time around, we will be considering equally interesting indicator and its possible uses with the help of this platform. So do come back on Monday. See you next time around. Thank you all for joining in. Goodbye.